Hello, students. Welcome to this another discussion video. So this time we will be continuing our discussion with the last topic, which is about the responsibility accounting. So the last revenue center or the last responsibility center that we're going to evaluate is the revenue center. So ano ba itong revenue center? This is a unit or segment within organization where the manager is responsible for selling the budgeted quantities of various products and services at budgeted price. So it's more concern of the gross amount, not the sales or the revenues. So examples of manager of a revenue center are first the sales representative selling bread to a supermarket or for a supermarket. Then the sales manager distributing automobile to dealers in specific geographic areas. Then the last one is a manager of the toys department in a local department store. So as you can see here, in the examples, the managers being evaluated is more concerned of not the quantity or the volume that we are going to sell, and of course na the selling price kasi it will also matter. The selling price would be a contributor to the total sales revenue of the entity. So paano ba natin i-evaluate no ang manager in a revenue center? So managers of revenue centers use variance no in sales price and sales mix to monitor or control their operations. So, etong mga managers ng mga revenue centers are responsible for achieving budgeted sales or budgeted levels of contribution margin by controlling the number of units sold. So, ito yung mga factors kung saan no they can influence no. So, meron silang influence dito, the number of units sold, the product mix, and of course the selling prices of their products. So therefore, meron tayong types of variances here, which will be the basis of evaluating the performance of a manager in a revenue center. So the first one is the sales price variance. So most probably what we're going to compare here is the actual sales price and the budgeted na sales price. Then you multiply it by the actual unit no na sale. So para lang siyang material price variance yung concept niya. Of course, this one is dealing with selling prices naman. So hindi siya mga purchase price, no? So we're talking about revenue. So therefore, yung mga presyo dito are related naman to sales, no? Or mga sales price siya. So this variance shows how much of the difference between the actual and budgeted contribution margin is caused by the difference between the actual and the budgeted sales prices. So again, you're going to compare the actual selling price versus the budgeted no or the sales price per master budget, and then you're going to multiply that with your actual volume of sales or actual sales volume or the number of units sold. Second is the sales volume variance. So ito magma-matter din kung gaano kadami yung na sold no ng manager or ng entity. So how do we compute the sales volume variance? So that's the actual unit sales. So meaning the actual sales volume minus the budgeted no sales volume or the master budget unit sales no. Ilan yung actual na nabenta, ilan yung budgeted mo na dapat mabenta. Then we multiply it by the master budget average contribution margin per unit. So paano ba natin i-compute yung master budget average contribution margin per unit? So this is just how you are going to compute no your master budget average contribution margin per unit. So you have your total, no, your total contribution per master budget, or your total contribution margin per master budget, divide your master budget sales. So this variance measures the difference between the actual unit sales and the budgeted unit sales. So you are more concerned of the quantity, no? Baka short ka, or baka hindi na hit yung target mo na number of units to be sold. Then lastly will be the sales mix variance. So this is how you're going to compute your sales mix variance. So it is just the difference between the flexible budget average contribution margin per unit. So this is how you're going to compute, no, for this amount. So this is your flexible budget total contribution margin, divide your actual unit sales, minus your budget or your master budget average contribution margin per unit, no? So yung computation nito is ito lang, no? So this is the formula of computing it. So after you have computed for the difference of the flexible budget average contribution margin per unit and the master budget average contribution margin per unit, then you're going to multiply that with your actual sales volume or actual unit sales. So that's your sales mix na variance. So the variance is a measure of the change in contribution margin caused by selling products in proportions, no, or mix different from those that were budgeted. Okay. So we have here a sample problem. This is Chips Galore, who sells to RISC chips na to small machine tool manufacturers. So ito yung mga products niya, si R66 and R100. So pertinent data for 2018 follows. So ito yung selling price per chip. You have the budgeted, and then you have the actual. We also have the variable cost per chip. Now we have the budgeted for both inventory or products, and you also have the actual. Their contribution margins, of course, needless to say, this is computed. Now, even if this is not given, you can still compute this by deducting, no, your variable cost from your selling price. So this is 50 minus 40, that is 10 pesos. This is 160 minus 90, so that's 70, no? So para kahit na hindi binigay sa inyo yung contribution margin, mako-compute nyo pa rin. The same also with the actual data. So this is just 55 minus 43. So you'll have 12. 155 minus 95, so you'll have 60. So fixed cost per chip, you have 6 na budgeted for R66, and then 30 na budgeted for R100. So ito naman yung actual niya na fixed cost. Then we have the operating income for, so that's 10 minus 6. Take note, this is in terms of unit, no? Per one unit ito na operating income. Tapos, binigyan tayo ng sales in units. So, ito yung kanyang budgeted na sales, yung sales volume niya. For R66, 1,200. For R100, you have 400. And then for actual, 1,000 each, no, for R66 and R100. So, the requirement is to compute for the sales price variance. So, para makompute natin ang sales price variance, no, so isa-isahin natin, no, yung R66 na product and of course the R100. So, for R66, you simply have to compare your selling price na budgeted versus the actual. So, 50 versus 55. So, you have a 5 peso difference, and then you have to multiply that with the number of units, no, na nabenta mo, actual, which is of course in R66, that's 1,000. So this is the computation. So for our 66, we have again 55 minus 50. This 55 is actual, 50 is budgeted, no, based dito sa ating table or matrix. And then meron tayong 1,000 actual units sold. So since mas malaki yung actual na selling price kaysa sa budgeted. So meaning the company was able to adjust their selling price, which is favorable, no? So mas okay yun kasi it will contribute more to your contribution margin. So 55 again minus 5, there's a 5 peso difference, which is a favorable variance. So you multiply that by the number of units na nabenta. So, for our 66, meron tayong sales price variance na favorable amounting to 5,000. For our 100 naman, so ganun din. You simply have to compare the budgeted of 160 versus the actual of 155. So, this time, mas malaki yung budgeted compared sa actual. So, which is of course unfavorable, no? And then you multiply it by 1,000. So that's 155. Again, actual versus the budgeted of 160. So there's an unfavorable variance of 5 peso per unit. So you multiply that by 1,000, the number of units sold. So you will have your unfavorable variance or sales price variance amounting to 5,000. So yan. So parang ka lang nag-compute ng materials price variance, no? Pero of course, this time, we're dealing with revenue. So therefore, gamit natin ay sales price. And in terms of interpretation, pag ang actual ay mas malaki compared sa budgeted, so that's a positive indication, no? Or that's a positive indicator. Pero pag mas maliit yung actual na selling price compared sa budgeted na selling price, then that's an unfavorable, no? That is not good. Kasi it will affect, of course, it will reduce your contribution margin. Okay, so that's sales price variance. So let's proceed to sales volume variance. So for the sales volume variance naman, what we're comparing here is the sales volume or the quantity sold. So you're going to compare your quantity, your actual quantity sold versus the budgeted na quantity sold times your master budget average contribution margin per unit, no? So paano natin i-compute 'yan, no? So let's have muna R66. Okay, so for R66 for example, R100 pala ito. R66 this one, and then R100 this one, okay? So how do we compute for the master budget average contribution margin per unit? So 10 pesos here is your contribution margin for R66. So this one. So we just pick up these amounts, no? So this is your contribution margin for R66 na budgeted. And this one is for your R100 na budgeted. So, your average contribution margin per unit per master budget. So, ito yon. So, yung 10 pesos to contribution margin times the unit sold. Unit sold na 1,200 is also based on the budget, no? So, again, let's go back here. That's 10 times 1,200. That's 70 times 400. No? So, yun yung iyong denominator. Yung baba, that is your contribution. This is your total number of units na nabenta. Okay, so again, sa taas is your total contribution margin. Then you divide it by the number of units sold, no? Total na. So meaning that's 1,200 plus 400, still based on the budget. So turned out that the master budget average contribution margin per unit is 25 pesos. So you just compare again the actual sales volume versus the budgeted sales volume. So in this case, yung actual niya, yung total, that's 1,000 plus 1,000. So you have 2,000 actual number of units sold versus the budgeted of 1,200 and 400. So that's 1,600 lang. So meaning mas marami yung nabenta na actual, no, compared to what was budgeted. So this is a favorable na variance. So you'll have 2,000 minus 1,600, so that's 400 difference in volume times the 25 pesos na master budget average contribution margin per unit. So you will have 10,000 na favorable variance. Again, favorable because actual mo mas marami compared sa na budget mo. Lastly, we have our sales mix variance here. So for the sales mix variance, compare muna natin yung flexible budget average contribution margin per unit and the master budget average contribution margin per unit. So this one, ito na-compute na natin kanina, it's 25 pesos, no? Whereas, ito na lang ako computein natin. So how do we compute flexible budget contribution margin? So pag flexible budget, magbabase ka sa budgeted na contribution margin pero based on actual na unit sold, no? So that's flexible budget. Nakabase ka sa actual na unit sold. Bale, budgeted yung price or yung contribution margin per unit, pero i-multiply mo siya sa actual na unit sold. So in this case, 10 pesos contribution margin for R66 times the actual unit sold, which is also 1,000, no? So you have 10,000 here plus 70 is your contribution margin per budget times the 1,000, that's the actual number of units sold. So this will be 10,000 divide 80 plus 80,000 pala. So you have 70,000 pala. So you'll have 80,000 lahat yung iyong numerator. Then you divide it by the number of units sold, no? So that's 1,000 plus 1,000. So a total of 40 pesos. Okay? So kung if you'll try to use this formula, no, and then substitute the amounts that you have computed, that will be 40, ito 40, ito minus 25. So there's a difference of 15 pesos. So times the actual units na nabenta na 2,000, so you'll have 30,000 favorable. So why favorable? Flexible budget is greater than the master budget na average contribution margin. So take note yung flexible budget, naka-anchor tayo sa actual unit sold. So again, pag mas malaki yung actual, no, compared sa kanyang budgeted, then that is a favorable indicator, no, since nga we're talking about revenue. So mas malaki, mas better, no, for the or better for the company kasi it indicates or it will denote additional income, no, additional increase in the profit or the net operating income of the company. So that's it, no, that's your revenue center. So this is how you're going to evaluate a revenue center. Let us have another problem in evaluating a revenue center. So we have here a current company's actual and budgeted sales and expenses data for April are as follows. So we have two products here. You have product Zim and product Zoom. So these are the actual data. Whereas, ito naman yung budgeted natin na data. Now, the first requirement is to compute for the sales price variance. So for us to do that, you have to compare the actual price or selling price per unit of both products versus their budgeted sales price. So for Zim, for example, you have to compare our actual selling price is 12.50, whereas the budgeted is 13. Then you have to multiply it by the actual number of units sold, no, which is 4,800 for Zim. So in this case, the actual selling price per unit is lower or no lesser compared to the budgeted of 13. So therefore, we can say that there is unfavorable variance. No? So that is 1250 minus 13 times 4,800. So yung unfavorable variance natin ay 2,400. No? So 2,400, again, because unfavorable because mas malaki ang budgeted compared sa actual. So this is unfavorable. Yan. So that's for Zim. For Zoom naman, so ganun lang din. You just have to compare your actual, which is 10 pesos compared to the budgeted of 10. So as you can see, there's no difference, no? So walang variance ang sales price ni Zoom kasi yung actual niya is just the same with the budgeted. So even if you'll multiply that by the actual number of units sold, which is 5,300 units, so still zero yung ating answer. So if you're going to compute no, the total variance or the total sales price variance, so that will be Zim is 2,400 unfavorable. And then Zoom will have 0. So overall, yung sales price variance natin ay 2,400 na unfavorable. So yan. Okay. So this is your total sales price variance. Okay. So let's proceed to the second requirement, which is the sales volume naman na variance. So para ma-compute natin yung sales volume variance, so we have to add muna natin lahat ng sales in units, no? Or mga sales volume ng product Zim and Zoom. So as you can see here, the actual sales in units no, for Zim and Zoom, that's 4,800 plus 5,300. That amounts to 10,100 units. No? So you have to compare that no, to your budgeted, which is 5,000 each. So meaning 10,000 siya. Okay? Then we multiply it by our yung tinatawag nating average contribution margin or master budget average contribution margin per unit. So how do we compute for that? Your master budget average contribution margin per unit. So this is computed by, of course, kunin natin yung mga budgeted na contribution margin. So for example, for product Zim, that's 6, no? You multiply it by the budgeted also na quantity. Then you add also for Zoom, that is 450. 450, multiply it by the budgeted also na sales in units. Okay? And then you divide it by the total number of units sold, which is per budget pa rin naman. No? You have 10,000 units. Okay? So, ibig sabihin, meron tayong this much. No? So, 5,000 and then 450 times 5,000. So, that is 52,500 over 10,000. So, you have 52,500 over 10,000. So, you have 525. So, you just have to multiply that by 5.25. So, this is 100 times 5.25. So, you have 525 na variance, which is favorable. Favorable because mas marami yung actual na nabenta compared sa kanyang budgeted. Last will be the sales mix variance. So, for the sales mix variance, so the first thing that you have to do is you compute muna the flexible budget average contribution margin per unit. Okay, so how do we compute for that? That is your actual, no, or your budgeted sales price. So, which is, ito, copy ko na lang ito. So, yung budgeted natin na sales price, which is 6, multiply by the actual units sold, no, which is 4,800. Plus your budgeted ito na sales price times your actual. Actual niya is 5,300. Over, of course, no, yung total nito, 4,800 tsaka 5,300. So, that's 10,100. So, yung numerator natin is a total of yan, 52,650. You divide it by 10,100. So, your flexible budget average contribution margin per unit is this much, no? You have 5.2929. 2129. Okay. So, what we're going to do is we just simply compare, no? Compare natin. So, let's have 5 digits here. So, compare natin ito versus yung master budget average, no? So, you'll have 5.21287 versus 5.25. Then, you multiply it by the actual number of units sold. No? So, multiply natin by 10,100. So, with that, no, again, this one minus this one. So, times 10,100. So, you will have, yan, 375. So, absolute value na lang natin. Okay. So this one is favorable or unfavorable. So this one is unfavorable, no? Mas maliit ang ating flexible budget average contribution margin compared to our budgeted or master budget na contribution margin per unit. Okay? So that's how you compute for the sales mix variance. So it's just the difference between your flexible budget contribution margin per unit and your master budget contribution or average contribution margin per unit multiplied by the actual sales volume. I'll just cut muna this discussion and I'll see you in the next one. Bye.